The price of Bitcoin rejected from $107,000 major resistance zone yesterday, a few $1,000s to the downside, and we are giving priority to the bears. There is higher probability for the moment with the information that we have on the chart that we could be revisiting $99,000 lows in the next coming days. However, there is a bullish case, and I will be explaining how things can shift very, very quickly in this episode. Now, the main reason why we're giving priority for the bears is because we are downtrending from the rejection of all-time high, lower lows and lower highs, as we do see here on the chart. And the bounce that we got to the upside is looking more corrective than impulsive. Just like this one right over here, it wasn't looking too great for this to be an impulse, and we finally tested the lows, as you can see. So there is priority for the bears at the moment, and I'll be explaining why, how we need to move, where the opportunities lie in the next coming hours and even the next coming days if we were to come down below $99,000. So make sure to stay tuned. Quick shout out to BTCC or Bluffing, guys. These both exchanges are absolutely great. You just need an email and a password. You get $10,000 in rewards the more you trade and deposit here. The more rewards you're going to get to increase your trading capital, and you get 20% cash back on your initial deposit on Bluffing, so you can use for your trading. Check out the links down below, guys. For Bluffing, it's the first link. BTCC, the second link, guys. You got great bonuses. You need an email and a password. That is all. Let's dive in through the scenarios. We are prioritizing the contracting diagonal to the downside, which is this one right over here. Now, the overall target zone of this contracting diagonal is testing the lows at $99,000. Now, that is where we start seeing some big major support levels. We got the 22nd of June higher low at 98.2 and the point of control at 96.5. Point of control of 2024 and 2025 price action. That is a huge point of control, and these levels get respected very, very nicely. Now, when we do take a look at this range right over here and this range right over here, we can see how the point of control got respected. We got a major rejection from that level. This point of control right over here, when we extend the line, we got a major bounce. Now this one, as it is twice the length from these two right over here, it's a big major point of control at 96.5. So when we go with that conclusion here of going to the lower time frames, hey, that zone is pretty nice. We got a potential Elliott wave pattern, which is a contracting diagonal to the downside. Coming down to this zone is definitely an area where we could be seeing good support. Now, the overall plan here, if we were to come down there in the next coming days, is look for proof of support. There are two scenarios here. You get an instant bounce, where that is an aggressive long trade, either the point of control or reclaiming the 22nd of June high right over there. That is a potential scenario. I would at least want to see a 1 hourly, 4 hourly candle close above one of these two levels to consider getting into that aggressive long, right? It is a swing failure pattern zone that you could get in aggressively. Now, the most conservative and more chilled way of doing it is looking for that next leg to the downside to really see that choppiness, get exhaustion, and form a consolidation down here. In this next wave to the downside, okay, we would want to see on the 5-minute time frame a kind of a 5-wave structure coming into this zone, right? Where the 5th wave, you want to see it not, struggle to break to lower levels. That's where you consider the reversal sign, when you get that exhaustion and you start trading sideways here on the 15-minute time frame, right? Holding above either the point of control or the 22nd of June higher low, okay? If the price does break down and you are trading beneath this level and it is moving down in a waterfall just with increasing volume, we'll just have to let the price chill till it actually finds a little bit of a consolidation, okay? You want a consolidation like this one, where you can see the price reversing later on. At some point, you want to see the price stop, okay, regardless if it's here or if it's down at the low 90K levels, to then consider that reversal sign, okay? Contracting diagonal here has the highest probability scenario for the moment based on the patterns, and what we would be looking for here after coming below 99K is proof of support, exhaustion of the bears, and that big reversal to the upside to follow after a few days hitting that level. So this is what has priority for the moment on the higher time frame. There's no discussion about it. On the other scenario, of course, we do have the most bearish scenario, which would be breaking down these levels, which is a multiple 1-2. Now, this has low probability as explained in the last few days. If we're considering this as your first impulse down, your corrective structure in your wave 2, now we are building the big wave 3 that absolutely capitulates to the downside. Now, I want to let you know that for the moment, we're not considering this a wave 3 because you overlapped with this bounce. Now, this second wave 1 and 2 is much longer than your first 1 and 2. So in a double 1-2, your second 1 and 2, you want it similar size or smaller from your first 1 and 2. So we're not giving this priority, okay? So the probabilities in breaking down here massively to get below $90,000 is very, very low probability. So we are expecting some support here in this zone in between $98,000 and $96,000 range. Give or take, might wick down a little bit, okay, because of volatility and liquidity grab, but we are seeing this zone to hold with high probability. So this scenario, the most bearish one, has a low probability, breaking down in a third wave here. You always need to consider it. If you are breaking down with high volume, you do not consider a long trade. We do not catch falling knives. We want to see proof of support from confluent zones and exhaustion of the bears, forming a little bottom formation on the 5-15 minute time frame to consider possible reversals. We want to trade responsibly. Now, other scenarios, of course, these are the bearish scenarios. Then we have to go through the 1 hourly time frame to consider the bullish case scenarios. When we take a look at liquidity, there's plenty of liquidity to the downside and plenty of liquidity to the upside, heading up to $112,000. So there is lots of liquidity up and down. Okay, so liquidity is not going to give us a high probability move at the moment, as it's pretty equal on liquidity to the upside and to the downside. Considering the bullish case scenarios locally here, which do not look too great, I would favor, first of all, the possibility of a contracting diagonal to the upside. Now, this line over here is your invalidation. If you hit $102,000 throughout today and tomorrow, that invalidates here the contracting diagonal, and we are prioritizing, of course, the bearish case, which is coming down to the low. Of course, there is an instant bouncing zone, which is the point of control of this range. This point of control, where we have these higher lows, can provide an instant reaction swing failure pattern. It's only for the aggressive scalpers. This would not be a long for me to believe that we're going to hit the highs here. However, it's a good entry, a good stop loss, and if you get a bounce, you could get a bounce of $1,000 to $2,000, right? You'll be targeting the point of control here for a quick TP, only for the scalpers that are looking at the 1 minute to 5 minute time frame. Okay, it is a reactionary level. Anybody that is interested to take an aggressive trade, that would be the only one here to consider a long, trying to catch an SFP right over here just beneath the point of control. Now, for the bulls, what we need to see here in this contracting diagonal is look no further. We need to reclaim that value area high of this range that we formed in the last week, right? Claiming that value area high and the pivot highs that failed to provide support yesterday. We got a little reaction, but ultimately broke it. We need a reclaim of that zone if we are considering that this is a bullish momentum and it is going to continue to try and attempt to hit the highs above $107,000. Now you can see that the price moves in waves here internally. 1, 2, 3, 4, 5, right? This third wave moved in 5 waves. So if we are going to form the 5th wave, what we want to try and detect is that first initial wave, right? That first initial wave, that is the moment that we can say that we are shifting to a bullish scenario. So until the price does not reclaim the pivot highs here and the value area high, we cannot consider the price moving to higher levels. Okay, we are downtrending. The bullish scenarios don't look too great. This move to the upside in the last few days does count better as a 3-wave ABC movement that we were discussing on the previous updates and live streams, right? We're looking for that 5-wave move up to finish that C wave, form a lower high at the 107, 108K zone, and potentially roll over to visit in the next coming days $99,000, right? Which is currently what is kind of forming here. However, the things can change very, very quickly. I will reconsider coming down to $99,000 only if we manage to move up here with a bit of high volume in a bit of a 5-wave structure looking at the 15-minute time frame. Then, of course, what we need is that movement down in a channelly bullish flag formation, lots of overlap, where we can consider this a corrective move. That is coming down to backtest these pivot highs right over here with the value area high of this range. That is the moment that we could speculate. What if this is a wave 1, wave 2, and we're just going to get that wave 3, wave 4, and 5 to get above $107,000? That is the moment that I would speculate in possible long trading setups, okay? If we do have higher lows on price action and lower lows on the CVD, that would give us a very good sign, right? Reclaim here and then get that corrective structure. If we form higher lows and lower lows on the CVD from this pivot, then that would be a good sign that we can attempt that a reversal is coming. Till that doesn't happen, we are rolling down and we're just looking for lower prices, right? So that would be the first initial sign of strength. Looking at this other scenario, ascending contracting diagonal, we never give it priority, especially when we're downtrending on the higher time frame. This does count better as a corrective structure, so we are prioritizing the move down to 99k. Okay, so that's what we would need to see, okay, for the bullish scenario. Reclaim of the value area high and these pivot highs in a impulse, and we want to see a clear corrective choppiness pullback, okay, down to the 104k zone to consider 1, 2, 3, 4, 5, revisit above 107,000. This is where you do take action, okay? On the other bullish case scenario, what we do have is multiple 1-2s. That is low probability. Your second 1-2 is also much longer here, okay, than your first 1 and 2. You could fit a triple 1-2. But however, the latest 1 and 2 is the longest one, and we never give this high priority, okay? We would have to see something very similar that I've just explained on the contracting diagonal. We need to see a good leg to the upside on the 15-minute time frame that reclaims major levels of resistance. That's the moment that, yeah, maybe this is a double 1-2 and we break up in a third wave in the next coming days. But we need our first initial sign of strength and reclaim of resistance to flip in support. Not much has to be explained when we do consider levels. We do have a few daily levels near the point of control. I wouldn't say that this is a great zone of confluence. Of course, we can get a reaction. The best zone to consider a scalp long is this higher low right over here as a quick move down, quick reaction bounce. But still, I think if we do start breaking the daily and the point of control, we want to be very cautious. Not the greatest zone to long, okay? You could get a quick SFP from the lows here. I would only consider it as a scalp. Reclaim of this level and corrective structure, we can consider longs to hit $107,000 plus. And for the bearish case scenario, what we would need to see here is a movement up, not managing to get above the value area high and this resistance zone and lose this zone. We can consider this a corrective structure where we are interested in a new short position here as we do not get above the value area high and these pivot high resistance zones, okay? That's the moment of choppiness. We form a bit of a bear flag situation. We can definitely look for possible shorts as we do lose and get back beneath the value area high, stop loss above the high, entry point. You know, we're looking overall for that bigger breakdown to get down $99,000, okay? Shorts were mentioned in the last 2 days. This double top, whoever shorted this level, absolutely great. You know, it was the option that we mentioned throughout the previous video updates, okay, on the lower time frame. Not much more has to be said. We'll be doing a live stream later on, guys, to go more technical and seeing the different options, okay? But these are the options that we have and what we need to see for a sign of strength and what we need to see for a sign of weakness to consider the next trading setups. Thank you for joining, and I will see you in the next one.